Hey, what's up, y'all? Some of y'all may have seen that I will post net liquidity updates on Twitter, and I'll post basically the change table, um, the chart of SPX fair value bands, and the net liquidity table, or rather the chart of net liquidity. And I haven't been posting lately, mostly because I don't want folks on Twitter to get notification fatigue. If there's not a really interesting change, I don't want to just post every little update necessarily. Um, Here's the SPX fair value bands and SPX, and the most recent one. And I think everybody knows the story of what's been going on lately. Um, SPX has been hanging out above the upper fair value band, and just recently came down below it, but is still, up there, really basically hanging out around there and testing it out. And while there have been some what I would consider to be fairly large moves in RRP and TGA over the past weeks, what you'll see is that a lot of times they really cancel each other out. So, on this day when there was a $67 billion increase in TGA, there was also a drop in, I'm sorry, a $67 billion increase in RRP. For that same day, there was a $56 billion drop in the TGA. And so, had I announced, hey, look, RRP is moving up, it's like, later that afternoon, I'd just have to say, well, okay. Well, actually, excuse me, this TGA number, always comes out the following day. So the next day, if I had waited for both of them to be there, it'd be like kind of a wash, because um, if you look at the change in net liquidity for that day, it was just a drop in 13 billion, right? Because of the difference between these two. Well, and also incorporating the Fed balance sheet, but that didn't change that much for that day. But for example, this day, the 23rd, which was yesterday, that's a little more notable, a drop of 54 billion. But again, in the grand scheme of things, really, this is just moving against. While this is an increase in net liquidity, it's kind of moving against these sequence of drops that had happened over the previous day. So if we look at the table, excuse me, the chart, you can kind of see what's going on here visually. Um, I mean, has it kind of trended downward? Yeah, maybe a bit. Some might argue that, from up here, obviously it dropped, and then maybe there's a slight downtrend. You can see the lows are kind of lower lows over time, but it's nothing hugely drastic. Nothing like what we saw here. A huge drop, and then an abrupt increase that was sustained. Sometimes we'll see a drop, at the end of the month due to RRP, but then it recovers, immediately, and we'll be seeing one of those in a few days. Okay, but my point here in this video is not to give you all an update on net liquidity. What I wanted to share is how I run these scripts and what scripts I run more or less on a daily basis, so that when I don't post an update, anybody out there who is interested in looking at some of this can kind of dig in for themselves and uh, you know see what these charts are showing. So here's this table which kind of shows the scripts I run, the times that I run them, and the kind of the reason that I run them. Um, so let's start at the top. So Monday through Friday at 9 a.m. I usually, well, I should say starting at around 9 a.m. and periodically throughout the day, um, depending on what I'm expecting to see, I'll run Treasury Direct Issued Maturing. And the results of that script are right here. And a couple of things I want to point out. You know, any of you who download these scripts, you can obviously run them from a PowerShell command prompt. But all of the ones that the way that I run them, I actually run them inside of Visual Studio Code, which is an editor, um, and it's free and it runs on Windows, Mac, and Linux. And the reason that I run it in here is because if I do, let's see, if I switch over to the code window, I've got the script in here, and whenever I want to run the script, I just hit Control F5, and that switches to the terminal window and it runs the script basically, and gives me the output. And that's nice because it's evaluating the script. I guess you could say it's sourcing it in a way, so that all the variables that are in here, I can actually interactively inspect right here. So for example, let's just say here I'm populating it's making an API call and populating result issued, right? So if I switch over here and look at result issued, we can see all the data's there. I'm going to cancel that because it's a lot of data. But if I pipe it into format table, look at all the fields. So now we can look at the data, like I say, interactively. We can actually see the data inside the script and how that's, and basically what it's pulling in. Okay, so that's why I run it. One of the reasons I run it in Visual Studio Code. The other is that if I want to change something, I'm right here in the editor, so I can come in and change a value or whatever, or change some of the code, and then immediately hit F5, which I'll do it, or sorry, Control F5, which I'll do again just to get the results. Okay, so I mentioned I run this script starting at around 9 a.m. So why might you want to run this script? Well, so let's go back to the famous net liquidity formula and chart. So by now, a lot of you who are familiar with this, you know that it's basically the Fed balance sheet minus RRP minus TGA. And it can be really helpful to know, I mean, just having the data is, helpful, but if you want to have an idea of where this is headed, it'd be nice to know kind of where each of these components are going to be moving, I mean, maybe in the future. So for the WALCL, which is the Fed balance sheet, we have a very good idea of how that's moving on a monthly basis because of the QT policies, right? So we know the U.S. Treasury securities are dropping at 60 billion a month, and then the mortgage-backed securities aren't dropping like a precise amount per month, but there's a range there. So basically, it's kind of bounded. The theoretical maximum drawdown is 95 billion a month for both the U.S. Treasury securities and mortgage-backed securities. So we have a really good understanding of the Fed drawdown per month. So that's kind of a solved issue right there. For now, anyways, at least until they announce a policy change, which doesn't appear to be coming soon, especially with all the recent inflation data that's come out. Now, the TGA, the Treasury General Account, can we get some insight into how that's going to move? Yeah, there's a lot of people uh, who study this, and they can tell you the TGA is made up obviously of a bunch of different line items, and people will point out like around tax season, obviously refunds are quite predictable. You're going to see some do that. Taxes are periodic. SSA, Social Security benefits are a periodic change. So some of the components are fairly predictable. And one of the components we want to consider, a really big one, is public debt. So this is the Treasury securities being issued, and then when they mature, that's the idea behind this script. Is we want to take a look at that data. So let's go back to the script output and take a look at what's being presented here. There's a lot of columns and data on the screen, but really the main column that you're interested in here, you can see, so there's bills, notes, and bonds, and then total. If there's just one thing that you look at, what you want to move to is the total, and in particular there you want to look at the change, the change column. So for example, I've highlighted this line here for next Tuesday. The change column is showing 31, so that's 31 billion. That's going to be the net change in public debt for that day. This is according to the Treasury Direct data, of course. And how it's coming up with that is it's the total being issued for that day as of now is going to be 366 billion, and then the total maturing is 335 billion. So the difference is 31. And where it's getting these numbers from is it's looking at for bills how much is being issued, how much is matured, right? And so what is the change? Same thing for notes, same thing for bonds. So the total is just basically just it's summarizing bills, notes, and bonds, the net change for the day. So basically, like for next Tuesday, as of now, the net change is going to be 31 billion. So we know, unless something changes, the TGA, the TGA is going to grow 31 billion due to this. Now, there's a lot of other things in the TGA, so maybe you'll have some withdrawals which will offset this a bit. But at least we know, hey, it's at least this much is going to be present. Um, So how confident are we that it's actually going to increase 31 billion next Tuesday? Well, if you look at this column here, auction issuing, we can see the dates that were so there are auctions that are going to affect this date, and we can see there was one on the 21st, the 22nd, and the 23rd. Well, all those dates have passed, and we don't have any more that are scheduled to affect this date. So at this point, unless another auction is announced, between now and next Tuesday. I mean, it's already Friday, so unless something an emergency auction comes up on Monday, that's pretty much going to be the value. So we know that it's likely going to change 31 billion. Um, let's look at this day. Next Thursday, I believe that. Let's see. Yeah, so next Thursday, if no auctions happen, what it's showing is that 108 billion in securities are maturing, and so if there's no auctions, it would drop by 108 billion. However, what we do see in this auction issuing column is that there's going to be an auction on the 27th, and which is next Monday, and it's offering 108 billion. 108 billion is being offered up for auction. So if all of it gets issued, that's going to completely offset this what's maturing, and so really there if it ends up that way, there would be basically a zero change. We'll see how the auction goes, but so that's how to read this line. Now if we go even further into the future, on this Tuesday, on this March 7th, we can see that 156 billion is maturing on that day, and there are so far no announced auctions that are showing up here, but we'll just have to wait and see what shows up between now and then to see if there are any auctions that are going to show up. So it doesn't, we can't see that far into the future but we can usually see maybe so oftentimes like at least a few days or a week or two. Um, so, if there happens to be like one of these that has like a big drop, 100 billion or whatever, and you're approaching that day and there's really no auctions, or no nothing being issued for that day, at least you'll know a few days in advance. Hey, brace yourself. You know, TGA is going to drop massively, which would be a large boost to liquidity, and vice versa. If you see this something a ton of public debt being issued, and it ends up being a large positive number. Like this was just 31 billion, but if you saw something like 100 billion or whatever, like that that would be something to 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 look out for. So that's why you might want to run this script. And I started. Okay, all of these times are Pacific time in the U.S., so just translate them to your time zone. But um, I started around 9, maybe a little after 9, because that's when some of the auctions start. Or by then, some of them have already run. But oftentimes they'll run throughout the day. So if it's an interesting day for me, like if it was something like this, where I happen to know there's an auction happening that's affecting this day. I'll run it a couple times throughout the day. And I mean, and you don't have to. You can just wait till the end of the day and see how they all turned out. But anyways, so yeah, so you can run this script, like I say, starting at 9 and then throughout the day. Okay, so then at 10:15 is when the RRP numbers are released from the New York Fed, and so that's maybe 10:15 is around when they're precisely released, so maybe wait a couple of minutes after that, and then you can run the net liquidity script, right? So I'll just run it now, right? Hit Control F5. Um, this is the, let's see, data for today. And so for some of you, this is obviously a pretty familiar screen if you've seen what I've posted before. You get the table output on the console, and then it also opens up two browser tabs, one with the net liquidity chart, and then the fair value bands. So something I'll point out is on the net liquidity chart, you can also see the Fed balance sheet, the RRP, and the TGA. They're just turned off by default. And so what you can do is, I mean, you can turn them on, but the chart gets kind of awkward. So what, like if you just want to look at one individually, just turn off the other. So like if we just wanted to look at the Fed balance sheet, there it is. If you wanted to look at the RRP, there it is, and then finally the TGA. Of these, really, well, obviously we care about net liquidity, and the reason we use this script. So you might wonder, why don't we just use, I mean, we can plot net liquidity in TradingView, so like, why don't we just use that? And the reason we don't is because it's okay, the Fed balance sheet updates once a week, and that comes in the TradingView just fine. The RRP is updated daily, and that also gets into TradingView. However, from what I've seen, if you really want to find out the number as soon as possible, as far as I've seen, it doesn't show up in TradingView at 10:15 Pacific time. It it shows up later in the day. So that's another reason to maybe use the script. But most importantly is the TGA is only updated once a week. So yeah, RRP is updated daily. TGA is only updated once a week, and that's kind of a huge drawback to looking at it in TradingView. If you look at the net liquidity script and you come up here, when we get the TGA value, we're actually not getting it from Fred. We're getting it through API, via API from treasury.gov. For the reverse repo data, we're getting it via API from the New York Fed. That's why we're able to get it right at 10:15, and as soon as it's available. And then the Fed balance sheet, we are getting that from Fred. That's just once a week, and it is released in a fairly timely manner, which we'll get to in a bit. So I was mentioning all that to say, when you are looking at the chart, the net liquidity chart, that you are going to get a more precise version of it through the script. It's going to have a higher resolution due to the more frequent TGA data than what you're going to see on TradingView. So as an aside, you should, if you're interested, maybe consider lobbying TradingView to offer a more up-to-date TGA data stream. But so of these four charts, net liquidity is obviously one you might be interested in. But the other, so Fed and RRP, you're going to get accurate charts from TradingView. But TGA, this is one that you won't see as high resolution on TradingView. So this is another one you might want to look at here in the chart. So I just wanted to show you when it loads the chart here, you can turn these on and turn them off individually using the legend here. And similarly with the fair value bands, you can turn them. Here we have the four laid out here. You can turn them on and off individually. If you wanted to turn off fair value to make it less cluttered, you can do that. You can turn off the SPX. You can turn off the low if you wanted to just focus on the SPX and the high value and the upper band. Okay, but so going back to this table here, so RRP again on Pacific time, that data is released at 10:15. So a little bit after that, I'll run the script to get the RRP number. Let's see. Which when you run the script, you'll just look at the RRP column to see what the change is. Like today, it was a small change; it dropped 5 billion. So yeah, I'll run it at 10:15, and then the TGA update is out at 1 o'clock Pacific time. So then I'll run it again shortly after 1 o'clock. And so those are the two times. So basically, run net liquidity script twice a day if you want the right up to date, number right when it comes out. So once for RRP, once for TGA, and then on Thursdays you may run it a third time, because that's when the Fed balance sheet number it comes out. Right, you can see here the number, the report is for Wednesday, but we don't get the number until Thursday. So on Thursdays at I think it's out. The report's out at 1:30, but it takes a little while for it to show up in the chart data for on Fred. So around 2 o'clock, more or less, run net liquidity, and you'll see the Fed balance sheet number come up. So yeah, so basically every day, net liquidity twice at these times, and then on Thursdays possibly a third time. I mean, right, you don't have to run it three times. You can just wait till the end of the day and just run it, and obviously you're going to get all the same data. But if you just wanted like to know exactly, you know, what the move was when it happens, that's when you would run it. Okay, so let's say 1 o'clock comes around, you run net liquidity, and you notice that TGA moves like a lot, which actually today is a good example because remember whenever we get the TGA numbers, it's always for the previous day, and so when the script was run today, it's showing us that TGA dropped 87 billion yesterday. That's a fairly big move. And so you might want to know, well, why did it move? And so that's what we'll get to next. So if that happens, like if it's a small move in TGA, maybe you don't really, maybe you're not interested in looking at the details. That's fine. But if it did move a large amount and you want to know, what contributed to that, that's the next script, which is Treasury Gov TGA top.ps1. So if you run this script, here's what you get. You see the upper half here is all the deposits for the TGA on that day. So this is what contributed to the TGA growing. And here's the withdrawals. This is what contributed to the TGA dropping. And while there's three columns of numbers here, really the one you want, if you're interested in that day, is just this column. It's the transaction amount, transaction today amount. These other columns are interesting because it also shows you the month to day amount. So for the current month, how much this category has contributed, and then also the fiscal year to date is this third column. But on a day-to-day basis, this is the first numbers are the ones you're interested in. You might want to be looking at. So as I mentioned, TGA dropped 87 billion, right? So this is this line here. This is for the report on the 23rd, and if the script output here, this is all right for the 23rd. So we know we're looking at the right day there. So the way to read this is this null item is like the total value chain. So here we can see 175 deposited and 263 withdrawal. So there, just by the difference in the numbers, we can see, okay, it was obviously a big decrease. Everything below that kind of tells us what went into this change. And so on the deposits here we can see public debt cash issues. This is the treasury securities being issued. 154 billion is what we see. And then if we compare public debt cash redemptions, this is redemptions of public debt. So now it's 206. So we can see the big difference there. Almost $50 billion. That accounted for a big part of this drawdown. But that's not it, right? That's not all, because there was also, I think the total was what, 87 billion back here. Yeah. So, okay. So sorry, I stepped away from the computer for a second and not sure where I left off, but I will just continue from here by saying, after you look at public debt, if you continue on below that, so there's this subtotal deposits line, and that's basically a summary of all the other deposits. And same thing for withdrawals. And then after those, you get into the individual line item numbers. So, like for example, an interesting one might be right now, tax refunds are going out, and so that was $36 billion. That accounted for a lot on the withdrawal side. On the deposit side, We have taxes withheld, right, $12 billion, and so you can go down there and look at the individual components. But anyway, if you just looking at these numbers, you can see that the withdrawals were a little heavier than the deposits. So that accounted for a lot of the difference, and what resulted in the drop of the TGA. So as I mentioned, this is a script that you can run to see why the TGA changed on a given day. And this is actually fairly important because, for example, with tax refunds, a narrative around that you'll see a lot of people will say, well, that's going to be fairly bullish for the market because this is money going back into people's hands. They're going to spend, that money. Highly likely they're going to spend it, especially right now, and that's generally good for the economy. So that's like, I mean, just that one piece there that would be considered, somewhat bullish. But anyway, and you can do that for each of these items. You can kind of go through and decide for yourself, like, do you consider this change to be, bullish or bearish for the market, or stimulatory or not for the market. So I do have another script that I will look at to look at the TGA details, but I didn't even list it on this table yet because it's kind of newer and experimental, and I'm kind of been messing around with it. But the idea with this is, if you are looking at the these components and you want to know, like, well, okay, over time, how did one of these fare? So for example, let's say, gosh, which one can we look at here? So here I'm showing a couple of components. One called cash FTDs received. This is taxes, federal taxes. And you can see here that it ends actually around the 13th, which is really unusual. I'm sure they haven't stopped collecting taxes, and that's actually because the way that the Treasury is reporting these numbers, they actually for some reason changed the name, and they'll do that occasionally. So this data stream is like, or that kind of ended there. But if you turn on, for example, taxes withheld individual, there you can see it's kind of continuing on there. But so here on the screen, I'm showing these positive numbers. That's deposits, and then the negative numbers, like this green one down here, I have turned on SSA benefits payments. So these are negative because they're obviously withdrawals. And so I'll look at this one as well sometimes. This will just give you a kind of some context around, if there's a big change in one of these numbers, you can get an idea of, like, well, is that an outlier? Or is it, so for example, SSA, this green one down here, you can see it's in a pretty narrow range. So if you saw something that you thought to be unusual, you could look at the chart here and see if it was, really an anomaly or not. But as I mentioned, this one is kind of experimental. The data, like I say, they rename things in here a lot, so you kind of have to be a little bit comfortable with going in and changing the code a bit. So I haven't really published that or shared that as often on Twitter. I could say I use that occasionally, and I just wanted to point it out here as kind of a bonus. So the other thing is, kind of at the end of the day, well, at least for 2 o'clock Pacific time, the other thing to maybe take a look at is the yield curve. And I have a script mentioned here, USTS yield curve.ps1. However, I usually will just go to this website, usually US Treasury yield curve.com. And here, I'll reload it. And here's what I would suggest, maybe consider doing this every day, is load the default yield curve, which will show you right. So that's today's the 24th, so it's going to show you the yield curve for today. But here's what I recommend doing: click on this button to pin the current data set. And what that does is, now for the current day, it's going to be red, and now we can change the blue line we'll change it to yesterday. And so just right there, we can see the blue line was the yield curve yesterday. The red line is the one for today. So we can immediately see, just visually, the entire yield curve shifted up. All the interest rates moved up. So that's generally considered to be, not a good thing, kind of bearish for the market. And if you want to go back further, you can just keep clicking this, and you can see it kind of change over time. You can even switch this to, like, let's say last month, and there you can see, right, so blue line is December 30th. Well, it's like 2 months, right? and almost 2 months. And the red line is the current one. So you can see the kind of the relative change there. So if I feel the yield curve for that day is fairly interesting and I want some more information on it, that's where I'll run this script, the USTS yield curve.ps1. So if I run that now, it's going to output the table, and we're going to get a browser window with the yield curve. So by default, what it shows you is the blue line is the yield curve for today. The red line is the yield curve from a month ago. And you can turn off that one. So we'll just look at the yield curve for today. You can also turn on this orange one, which is the yield curve from yesterday. So just very easily you can see, how did it change from yesterday, as well as how did it change from a month ago. So far, that's not anything else that there's nothing different between what we see there and what we see with this website. But the additional information that we have here is a couple of things. Number one, the RRP award rate is at the far left corner. So like if you look at the normal yield curve chart here, it starts with the 1 month. Here, it starts with the RRP. So, right, it's 4.55. So let's say at the next FOMC, they decide to raise, interest rates, whatever, 25 points or 50 basis points or whatever. This will swing up, and then that'll be reflected here. So that's one reason I like to look at this, is to keep the RRP award rate in context. The other thing is this also shows a couple of securities that don't show up in this chart and a lot of other charts, which is the 2 month and the 4 month, which some folks may not be interested in, but just for completeness, I do show them here. And then finally, these horizontal red lines are the Fed funds target range. And when you run this script, what you get on the console output is this this table, which for any given day is going to show you the interest rates. But what's interesting here is if it's red, it means that that part of the yield curve is inverted. So like from the 6 month to the 1 year is less than the 6 month, and so it's red. The 2 years less than the 1 year, so it's red. The 3 years less than the 2 years, so it's red, etc., etc. And if it's green, like the 6 month is green, so it's greater than the 4 month. The 4 month is greater than the 3 month, right? So it's green. So basically, just at a glance, you can see the entire yield curve from the 1 month through the 6 month is non-inverted, right? And so visually here, the 1 month through the 6 month here, that's just increasing. And then also in the table, you can see that the 1 year through the 10 year is inverted. So 1 year right here through the 10 year, that's all descending, right? And then the 20 year goes up, and then it drops back down into 30 year, and so that you can see that. But the nice thing about having it in table form here is you can see over time, if it's changed. So here you can quickly see, like here, the 2 month was briefly inverted with the 1 month. Here we can see that while usually the 1 year is inverted with the 6 month, for a couple of days here it was not inverted. So anyway, so that's something that you also get by running the script. So that's just, like I said, just a summary of some of the scripts that I've shared, and when you might want to run them, and why, and how to interpret the data. Okay, please let me know if you have any comments or suggestions, and thank you for watching. Okay, bye-bye.